Hey, what's up, guys? So this is going to be a couple quick tips on how you can trade and how I'm trading to since we're now in a recession. Kind of some things to take note of. So the last time we had a recession was obviously '08, but we didn't have crypto back then. So the closest thing we could kind of look at it and compare it to is kind of the Nasdaq after the dot-com bubble in this recession in the early 2000s. So what we could look at on the NASDAQ is how it came down to bottom out at about 83% down from its all-time high. And also what we could look at on the technicals, this is money flow on Market Cipher right here. This is money coming in really, really high, really overheated, and then money coming out. So it bottomed out around here. This was September of '02. And this was at around 9.0. You can see over here, 9.0 level that we are in money flow. So what we can do is kind of compare it to Bitcoin and where we would guess we would kind of be able to bottom out here. And right now we're at about 20 or about 17, 18, 16. To get to 9 or 10 where we were with the NASDAQ, it would probably take a couple months. September, I'd say the earliest we could bottom out. And we could kind of map out, the percentage from maybe where we came down from here to here. Now, this is going to be a crazy low number. I'd say kind of from a repeat of from here to here, and then we're at 23K right now. Another 40% down from where we are. This is an estimate. It's kind of just guesstimating, never going to be exact. 13K, low teens are where we could look at for Bitcoin. So what I'm doing with my trading is really paying attention to being more greedy with the shorts, paying a lot more attention to the shorts as well, because that's where more of the money is as long as we stay in this bear market. Now, one thing I'm looking at to kind of end the bear market is a possibility of this 16-hour green dot, 16-day, green dot on Market Cipher confirming. Now, you would see the dot, it confirms here, you could see when it confirms in 10 days. It could go away. And what happened here in our bear market in 2018, it actually appeared twice, right here, and then went away. And we came down about, from those areas, about another 40 to 50%. So to come down another 40, 50%, 13, 50%, low teens, 11K, 13K. Those are a lot of big areas for a bottom. We also have a huge weekly moving average, 300 weekly moving average. That's at 17K, but we could edit this and look at our 400 weekly moving average, which I believe this will be a very big point if we come this low, which now lies at 13K, which is a big, big place where I would look at for a bottom in a recession. Now, what we also want to look at is in these bearish times, Bitcoin typically outperforms Ethereum. This is Ethereum compared to Bitcoin. Now, if you look at these technicals, this is where Ethereum started to outperform Bitcoin by a lot here. Look at this money flow crossover from red to green. This is money coming up, and it outperformed Bitcoin by 200% for a nice period, year about. So it looks like the same thing could be happening here. And these blue triangles in Market Cipher mean trend reversals. Look at the last time we had a blue triangle. So this one, Bitcoin started outperforming ETH for a little bit, but I think it's going to be more like here since this was the last bear market, 2018. It could outperform it for quite a bit here, and we could kind of guesstimate, when it would bottom out against Bitcoin, July 2023. Bitcoin could still outperform ETH and a lot of the altcoins until then. Now, if we look at the other thing too, if we look at when everything bottomed out, which was in December 2018, look, Bitcoin still outperformed ETH. ETH still bled against Bitcoin until September 2019, about 9 months later. So it's quite if we bottom out and say September of this year, it's probably not going to be until spring or summer of next year when you want to be getting into ETH or really going long on ETH. You want to be focusing more on the Bitcoin longs at that time. So that's what I'm doing in terms of recession. Also, what we could look at is other asset classes that do very, very well in recessions. This is gold compared to the S&P 500. Now, obviously, over time, you could see that gold tends to, at least from the 1980 onward, bleed against S&P 500. However, there are certain periods, and I've circled here with money flow coming up, areas where it does very well against the S&P 500. Silver as well, too. Silver is usually just a more volatile version of gold. So right here, this area right here, this was 1969. Look at that. I mean, this was insane. Outperformed by about 1,700%. That I don't think it's going to happen unless we have a major dollar crisis. But right here, or I mean, excuse me, not a major dollar crisis, but just major, American economy doing very badly. But around here, 500%. If we do go into a recession, this was from '03, this area at towards the end of that recession upward. So after the recessions, it tends to do well. So it starts doing well during the recession right here against the S&P 500. So right here could be where we, started to pull back with S&P 500 and gold started to outperform it. I think it could do very well in the next couple of years if we kind of get an estimate, something like this, and then you top out in 27, it could definitely outperform it by 100% or more. This is a conservative estimate. It could even come up to these areas. Who knows? But I would be really looking to go long on gold. Just because everything else is in a bear market, doesn't mean there aren't other asset classes that are in a bull market, such as gold and silver that might be coming in. So I'd be looking more to go long on gold and silver right now, and more still going short on the S&P 500, on the NASDAQ, and also on Bitcoin before we get those signs that I showed you before. So that's how I'm navigating the market right now in the recession. I think that's going to be really helpful in terms of thinking of probability and winning the most amount of trades. All right, guys, have a good one. Bye.